Good morning. I'm Nick Smith. I'm the CEO of the Investing News Network, and I'm delighted to be joined by precious metals aficionado David Morgan on the morning after the US election. Good morning, David.
Nick, it's great to be here. Thank you.
Excellent. How do you think the political change we are seeing in the US and Europe is going to impact the gold and indeed the precious metal prices in 2017?
Well, I've been asked that question several times. In fact, the last time I recall, I was in Canada at the Mines and Money show, and I basically said I'm agnostic about it. I think it doesn't really matter which candidate gets the presidency in the United States, that the economic and financial conditions are entrenched so deep and so far and so wide that we have a precious metals bull market regardless. That doesn't mean there won't be some short-term iterations, as we already experienced. I mean, I think the Dow was off 500 points at one point, or maybe it's the S&P, and we had gold up, I think, almost $50, hit about the 1330. And then within a matter of hours, we're back basically to where we started. I mean, as if nothing had happened in the market. So we had this huge percentage increase in gold that was basically washed away within a matter of hours. So that is a precursor, I think, to going back to the fundamentals. And the fundamentals are there is a systemic problem worldwide based on a lie that you can print wealth. And that's being experienced through all the marketplaces, the Eurozone, it's experienced in the United States, obviously Canada and everywhere else where we do trade. And because of that fact, there'll be more and more, let's say, awakening to the fact that preserve your financial health, you will need the precious metals at some point in your life or some point in, let's say, the next few years.
So you're thinking we're looking at a continued increase in the price of gold and silver through 2017?
Absolutely. I think this year is pretty hard to determine. We may just go sideways to down for a while. It's possible we get a lift. I'm more favorable to like a longer consolidation period, but 2017 will definitely see a lift throughout the year. Won't be straight up, ebb and flow back and forth, but overall be higher through 2017 than 2016. And then 2018, I'm looking for an acceleration, although it could take longer than that. I was asked recently if I thought that the peak in the precious metals would be on the 4-year presidency of Trump. And I said, no, I think that you will see a peak in the precious metals, the paper price of precious metals within this 4-year time frame.
Oh, well. As we bring 2016 to a close, what are the main lessons that you've learned this year?
Well, great question. First of all, that the market can still humble you. I mean, I'm much better at it than ever, but a few of the stocks that we did in the speculative section that have very high merit, you just can't vet everything. I mean, I did my best on this mobile mill project, which is very favorable to the small miners that actually have gravity feed gold. And what I didn't factor in was that a contract would be reneged upon. And these are human problems. They're not mining problems. They're not gold issues. It's the human realm that we deal in. You know, gold, people blame the gold standard. I mean, I remember one of the first lectures I ever gave in the public domain, and one of the other speakers was challenging me, Nick, about, well, gold doesn't work. You know, look at the banking system in the late 1800s, and these banks failed, and they were on a gold standard. And I was kind of tap dancing at the front of the stage because I didn't expect, to be ridiculed from another speaker, especially during the speech. But I, composed myself and I said, it's not a gold problem. Gold's an inert element on the periodic table, uses money for thousands of years because people voted that way with their pocketbooks. In other words, they determined it was money, not me. And it's certainly not the element itself. It can't think. And it was a human problem. If the banker said they had this much gold in the vault and they didn't, they're lying. That's a human issue, not a gold issue. So coming back on point, Nick, I think I'll leave it at that. But always be diversified. In other words, if you are leaning toward the precious metals, you have to diversify within that sector. And then that portion of your portfolio, which I recommend around 10, maybe as much as 20% if you're a full-fledged gold or silver bull.
And that's in the physical asset?
I'm sorry?
That's the physical asset, 10 to 20%, or in stocks and...
The whole thing.
Okay.
About 20%. I go through that and how to use the Morgan report. I mean, I have people that don't buy the stocks at all, which I think is a mistake, but that's my belief, not theirs, that are metal only. And I have people, unfortunately, that are like stocks only and no metal. I think a balance between the two. And I go through that and how to use the Morgan report, put up a hypothetical, like if you're this age and you're conservative, you would have like this kind of metal balance between silver and gold and stocks. And if you're this age and you're very aggressive, you could have this kind. I just kind of outline it. I mean, there's no one size fits all. We're all individuals. We have different styles and different risk tolerances. And because of that, I tried to give an outline or an idea of what works best for that individual.
Okay, excellent. One of the more interesting things I've noticed over the last couple of months has been a little increase in the price of copper. What do you think is driving that, and is there an opportunity now for investors?
Well, as you know, Nick, we look at more than just the precious metals. I've looked at copper, moly, lithium, coal, oil. I mean, we look at almost everything in the Morgan report that has to do with the resource sector. And I have been pretty negative on the base metals since the last year and a half or two, because I think we're at a point in the financial structure where only the precious metals, or let me rephrase that, the precious metals will be the best place to be. Okay. However, Dr. Copper is called Dr. Copper for a reason. It's got a PhD in economics. And if we see an increase in the copper price, it's very much telling us in real terms that there is a further industrialization going on a global basis, or at least somewhere on the planet. I am remiss to say I'm excited about it yet. I'd want to see a larger increase in the copper price out of the range it's in right now on large volume, and I'd like to see it sustain. So right now I'll remain neutral on it. I am hopeful that there's not so much growth, and I'm not really for sustainable development. I'm for intelligent application of the resources we have available. And I'm not a technocrat either, so I'm not trying to be all things to all people. What I'm trying to say is that we have done a great misdeed to ourselves because we have misallocated our resources. And because of that fact, I think the millennials really are starting to get it, at least the deeper thinkers in the millennial generation, about how you allocate resources to the maximum efficiency of everybody involved. And that, for example, would be like Uber. I'm not pushing Uber. I just used it yesterday to get my truck out of the shop. Back on point, do you really need to own an automobile? I mean, that's an idea that would never have struck my generation. It would not only do I need an automobile, what's the biggest, fattest, baddest muscle car I can buy? I mean, that was kind of the attitude of my generation. Millennials think differently. It's more about experiences and that type of thing as a whole. So anyway, back to your question, Nick, and I'll throw it back to you.
So neutral on copper, and as we know, the Morgan report does cover all the commodities, not just really silver and gold. So which commodities are you most excited about for 2017? We've had a year of a boom cycle with regard to kind of some of the energy metals like lithium, and cobalt is starting to run now. Do you think that will continue? Where do you think investors should be looking?
Oh, very good. I was very early on the cobalt story, and of course that's come to the fore now. I usually am early, I'll admit that. Mary Ann Green, who's now deceased, did a great job of a cobalt project in Idaho, and I followed her for a very long time and reported on her company for years, actually. Favorable to cobalt. Lithium, I think, has been overdone, although it's very important, especially with the Tesla push. We actually had a lithium project. The one that I chose unfortunately failed. It was a discovery project. I called my secret sources, you might say, and asked one of the top geologists I know and trust and known for years. And I asked him point blank, am I making a mistake or not, before I put any words to paper. And he said, David, look, you're in the absolute right area for a good discovery in lithium. So I felt okay, because when I tell people to speculate, I absolutely explicitly tell them, bet money you can afford to lose. That if the company makes a discovery, everyone's happy. And if it does, you can actually add to your position, but you don't want to start off with a big position in a speculative company. So I'm favorable to lithium. I was one of the first on the rare earth elements due to a friend of mine that got very, very interested in the space, and is actually one of the leading thinkers and doers in that space. He's kind of backed out of the sector, and he's kind of spent more time with his family and that type of thing. But definitely a leader there, and he would contribute to the Morgan Report from time to time. So I think there are things outside of the precious metals. I'm still favorable to the metals because the monetary system has got so many dynamics pointing to situations that are not correctable, at least in my view, very easily. So that will put pressure on tangible assets that hold value throughout the centuries. However, there is technology. Will technology save us? To be determined. I'm somewhat doubtful that it will in the short term. In the longer term, maybe once we get the reset and we revalue not only our human experience and what it means to cooperate more than fight with each other, we get a more cooperation on a global basis, or at least even in a neighborhood. We certainly could accomplish a lot more than having an adversarial point of view. I mean, and that's something that either Hillary or Trump would inherit, regardless of who got in. There's this huge divide between ideologies. And because of that, it's very hard to bring people together. But a real leader can. Not that everybody's going to join hands and sing Kumbaya. I'm not that idealistic. But I am idealistic enough that we're reminded of our common core value system and what works, what's practical. I think you can kind of have a mending of the emotional upheaval that's taken place from a paradigm that doesn't work. Again, that we can print wealth and everybody can be happy and joyous and free. You can't do that. Unfortunately, in the human experience, it takes work at some level. So I think that's where we're going. I'm hopeful that the attitude may shift and there will be some true leadership. But I'm old enough and wise enough to know that that's rather idealistic, and the more likely experience will be more of the same.
Super. Just as we wrap, any tips you could share with our investor audience, apart from the obvious and probably the most important, which is subscribe?
Well, thank you for that. I think balance, is something I've been overused word, preach to myself. I mean, the idea of, spiritual, mental, physical, try to do something nice for somebody and not get caught. I mean, be a better person, as trite as that may sound. I think, at my age, it's more about what I can give back. I mean, my profession, that's a very interesting spectrum, because there are those that are totally self-serving and do situations that are very beneficial to the very few and the publisher themselves. And then there's others at the other end of the spectrum that certainly eat their own cooking, yours truly included, that truly do have, the best interest of all subscribers at heart. So it is a service industry. It's a subscription service, and it means that, how can I maximize people's financial well-being by doing the research that we do and telling it like it is? Do we get it right every time? Absolutely not. But do we have that in our hearts and heads? And the answer is yes, we do. So balance, don't make finances the most important thing. I did that for a number of years, from my 20 to my mid 30s. It was, money was everything to me.
You wanted that muscle car.
Yeah, and the muscle car and all that stuff. I've, thank God, matured well beyond that. So it's, again, balance. So maybe a little overdone, Nick, but thanks for giving me the opportunity to state that. I really mean it too.
No, there's a really important words, especially at a time like today, directly after the election and what we've seen happening in Europe. So David Morgan, thank you very much for taking some time to speak with me this morning. We'll look forward to getting this message out to our investor audience over the next couple of days.
Well, thank you so much for having me.
Thank you very much.